Again, a wonderful evening to everyone, and happy to see so many people this time around. Despite I hear the traffic was quite bad and the rains were quite intermittent, but such is the country that we live in. Many times we have to be able to learn to be able to expect and building a lot of troubles, and similar to our markets, we have to do exactly the same thing. Now, today we'll look into the technicals, and I would like to try to check to see and compare with what we had presented to you in the first briefing we had early this year, and see how things fare in terms of the trend status. And let's see how to be able to navigate through these particular periods where, of course, parts of the world are experiencing some turbulence. And let's see if things are as turbulent here, and whether much of the weaknesses we've been seeing in several parts of the world may attempt to come to affect us. Well, I entitled my report "The Great Divide," because we've noticed such of these imbalances are being created all over the place. We have certain weaknesses that have to be dealt with, and clearly it's going to be able to force markets to be able to adjust, maybe some of them into the short term, and these things, I believe, really can open up some trading windows for many of us who perhaps were quite hesitant to come in because of maybe overvaluation concerns. But hopefully we can see these price adjustments give more meaning to why we should be looking to invest back into the market. And let's first try to understand that having a view of markets today is a little bit more difficult. And the reason for which is because there used to be a time where you look at maybe one or two big markets in the world, and that pretty much told you where everybody was going. Nowadays, it's not as simple. The world has become a little bit more complex, although being very much more intertwined. Economic cycles are very different today, and that just makes life a little bit more difficult for analysts right now, because it had to compartmentalize different parts of the world. And we feel that this perhaps is going to continue on, and that means that you have to be a little bit more heightened in your ability to check out what is the pressures taking place on this side, and having to see whether that will factor itself back into our sense of our part of the world. And I believe trading ranges should be rather large. That also can be looked at on positive sense, because that means you'll be able to buy at much perhaps better prices in order for you to have bigger potential upsides into the shorter medium term. We've also noticed that much of the extended swings we've seen in more of the stronger markets are starting to be able to feel some pressure right now, and we may have to be able to take a much more closer look and maybe raise a little bit more of our defensiveness to be able to tackle much of some reactions that might be necessary into the short to medium term. But I don't feel any of the changes that we might see, or its adjustments, are going to be able to affect much of the trends that we've been seeing in the stronger parts of the world. If any, I think these are opportunities that we should learn how to be able to expect, try to be able to build it in, calculate where you want to be able to reposition, because nothing will beat the prepared mind in being able to take opportunities when it's quite timely. Now, of course, like I said earlier, worldwide imbalances really have to be able to play themselves out, and much of this will present the swing trading strategies. I'll look at a few issues we have later, so that we can try to see how to be able to take advantage of many of these types of swing conditions. So let's first begin by trying to be able to review what we've seen so far in the first half of the year, and seeing what other continuing trend flows have managed to manifest in the world. Let's start first, of course, from our point of view, because, of course, the Philippines has been the darling market. Second only to Venezuela. We've seen very, very sharp gains into our index in the not so distant past, and I think you can see over there that we're number 2 in the rank. We took in about 15.2% in the period year on year, and I guess although that was a very nice promise, that we may have to be able to do some adjustments as well to make sure that that can be a little bit more sustainable. With regards to the Philippine peso, our currency has done quite well. As you notice that we've had punched away from that very, very lengthy sideways range that we've had. The last high we had was lower than the one we had previous, and that means that the peso is really trying to be able to build on its internal strength. Before coming here today, I did notice that there were projections that our central bank people were trying to be able to look at the possibility of lowering interest rates to try to be able to contain too much movement into that peso. And perhaps that's what caused a little bit of some movements into our market today. And that also is, like I said, and engendered the fact that that type of appreciation of the peso needs to be slowed down somewhat. So although I put down, I'm expecting about a 41 to 40 target into the peso, it might just take some time to be able to achieve it. But I think looking about 1 year's horizon, that might be quite a possibility, assuming the Philippines will maintain its growth capacities, as of course April mentioned earlier on. So we'll have to again look into that. I think the downtrend into that peso, or in other words, the firming of the peso against the US dollar, I feel will continue, although I'm sure that they will try to be able to resist that and put a little bit more slowdown in that appreciation. And let's just jump quickly into the United States. We feel that movements in the US was much better than what we looked at 6 months ago. They've been trying to cap as much of the difficult situations. Of course, April did talk about the fiscal cliff coming towards the end of the year. But if you notice, the Dow Jones have been making higher highs, higher lows. These are good considerations telling you that the uptrend is very much intact. However, we've seen quite a bit of a rally in this last few months, and this is the reason why your index seems to be slowing a little bit, and I have to be able to open up a chance for it to be able to accomplish the correction that it needed to do. So if you were to look at that image that you have, it's quite possible we could see in the short term a little bit of an arresting of that rally and maybe try to cushion that a little bit lower so that it could try to be able to lower itself maybe closer to that major trend line. And we feel that that trend line, however, will secure itself and will probably not break. And even if it did, maybe for a little bit, we feel that prices should be able to resurrect itself from that particular bout of weakness. So we're expecting a range between 11,700 and about 14,200 into the next maybe 6 to 8 months for the Dow. Now, we've also noticed a little bit of a change, and I think this is something worth looking at. We've noticed that bond prices in the United States have gone tremendously up. In fact, if you look at the trend in the bond market for a very, very long period of time, it's quite hard to look back in history and say when has the bond market haven't been picking up. Because the image that you see back here shows you a period back since 2000 going forward, and you can clearly see the movement up there has been quite strong and even a bit more intense nowadays. And that's because, of course, the edginess that people have been looking at, building, of course, the pressures being seen in Europe and the slowdown being seen in China. And these are the reasons why, of course, people are buying bonds to be able to secure their yield, despite, of course, the low interest rate environment. But if you were to look at the S&P 500 directly below that, you will notice something that although they both seem to be angled going upwards, if I were to segment the image one after the other, with the green, red areas, the green areas that you see there are showing you when, of course, the equity markets or the S&P 500 were quite strong. You notice that the bond market seemed to be coming down. Again, if you look at the red period following, you have a strong decline into the S&P 500, and you have a very, very strong upward movement into bonds. And that relationship has actually been quite firm until recently. If you look in the last couple of years, things have been changed. Now you see the bond market edging up, and you see stocks also edging up at the same time. This is not very common, and I don't think may last too long. And you also notice the price channel that we're looking at. Bonds are trading on the higher end of that range, and that means that there might be some degree for it to be able to make a little bit more of a major correction, so we have to be able to keep watch of that. Hopefully, a sell-off in bonds could be able to draw some of that capital back into equities. But I hope it doesn't take it too quickly, because we don't want any jarring effect to be able to destabilize too heavy an investor base for clearly, I think, an overcrowded trade into the bond market. So hopefully we can see much more gradual appeasement into that. And I hope that the S&P 500 can continue on with its regular angle to move upwards, while of course bonds are becoming a little bit more depressed. Now, another factor we also consider when we look at the technicals, obviously, is the sentiment of people. If you look at the image I have on the screen, we call this the volatility index. This means this index shows you that the more volatile that the market gets tells you how uneasy investors are, and that sense of uneasiness is in itself an indicator. Now, whenever you see that volatility index heads towards the lower end of that price range, that tells you that there is lower volatility because people are more secure, they don't feel very bad, they're much more heavier invested into the market, and that shows you extreme optimism. Now, it's good to be optimistic, but to be too optimistic sometimes itself may create some problems. If you've noticed the S&P 500, we're just coming off that lower end. And that also puts more reason as to why there's a potential for markets to be able to subside a little bit, to be able to unravel much of that heaviness in optimism and unwind much of that positions into a corrective flow. So this is a bit of a warning. So this could also add to justifying why the S&P 500 may likely attempt to be able to wrestle with some corrections into the short term to try to fix this particular condition. Now, trying to move into the other markets, and we'll go into some currencies and commodities at the same time. Let's have a look first at Europe and China, because of course these are the interesting stories that have been putting a lot of blight into our short to medium term environment. And quite clearly, if you look at the condition, the graph onto your left side is the European index, so that's a basket of different world indices in Europe. And you can clearly see that the downward angle is still very much in place, although there is an attempt to try to hold the base. We're coming towards a point where a major decision has to be made, at least for Europe. So by the looks of that, we probably are going to be making a very important decision into that particular side of the world, maybe within this next semester. So I don't think that we can afford not to be paying attention to what's going on there. If you look on the right side, we have China. Very clearly, the trend there is quite down. As you're very much aware, economics there are actually slowing down because China's been in a high growth phase. And now, of course, they've implemented policies to try to be able to slow things down. And clearly, that's taking its impact on growth of corporations, which is reflecting itself into the market. And if you look at these particular trends, it doesn't look like they're ending soon. But of course, in Europe, clearly a big decision is about to come. Unfortunately, the trends are not in its favor, so it's quite difficult for me to try to forecast a potential breakout topside, and there looks like there's probably more of a higher capacity for it to be able to correct even further below that range. So please be prepared. Another factor to be able to tell us why things aren't just over yet, these are the interest rate cycles of each of those two country areas. Where the Eurozone, you can clearly see that interest rates have been brought down again after flattening for some time. And interest rates in China have also been nudged down in recent periods, at least towards the beginning of this year. And the reason they're putting these interest rates down is because, of course, they're still trying to fix a problem. And until we see a little bit more of reshaping into flatness into those rates means that while that adjustment's being made, that the problems are still existing in their respective countries. So that's why we still have to make sure that our alerts are up and be able to make sure that we can factor much of what these can do into our potentials pullbacks for prices. Also want to be able to have a look at the Eurozone area and of course the Euro index, which is the Euro dollar and the US dollar side by side. And you can clearly see the inverted relationship they have, where the euro continues to be depressed and will more likely challenge the previous low that you see very much back there, which we saw in 2010. I think that's a very easy target to be able to hit in a short period of time, so there's quite a possibility that the euro could actually break it. Into the contrary, which is the US dollar, it's been managing to pick up some strength of that weakness in Europe, and I think that the upward trend does not show any faltering signs as of yet, so that means that the US dollar could continue to be able to appreciate into the medium term, looking potentially maybe maybe at an 86 range into the euro to the dollar index. Moving to commodities, and maybe some of you are probably wondering what's going on into some of the mining companies we have in the Philippines, because they have not been quite participant in much of the rallies that we've been seeing by quite a segment of our local stocks. Well, it's not entirely only because of the implementations of the executive orders trying to be able to adjust the new policies we have locally, but you clearly see metal prices in the world markets have been quite depressed, from looking at copper, gold, silver, all of which have made tremendous pullbacks in the last few months, and it has not finished that particular corrective move just yet. However, you can also see similarly they're also coming towards the pinnacle of their area patterns, and that means also bigger decisions are going to be coming out of that. Again, that's also going to be done during the second half of this year, so we also have to be quite prepared just in case that the slowdown in much of the other countries will reflect themselves here and continue to press on these metal prices. Let's look into energy. And if you look at energy prices with oil, US gasoline prices, and natural gas, you could also see pretty similar movements where we did see that they get locked into quite a bit of a range. The range has been quite wide because of a lot of the turbulence that's taking place in some Middle Eastern countries, as well as some supply issues in some areas that, of course, have been taking in some local problems. And we feel that energy prices will continue to remain high in terms of their area patterns, so be prepared. You're going to see a lot of movement into particularly oil and, of course, in gasoline ranges. It's very difficult to try to say which way they're going to be punching out of, because I think they're still early in the area patterns. So right now, I'll limit my perspective to a wide range into energy for the meantime until I can see something a bit more definite to be able to guide you on. But I will release any other report that I would find in terms of any trend changes as soon as I discover them. Now, maybe some of you may not be too keen on watching this because this happened into the short term. There has been a tremendous amount of appreciation in some agricultural products, particularly in the U.S. And you notice here on the left side, we have soybeans, wheat, and corn. Prices of these commodities have shot up because a particular drought in the midsection of the U.S. so much so it affected supply problems by more than, I think, 23 to 26%. And that's the reason that you get an incredibly sharp up move into these particular prices. Now, you might be wondering, well, we don't really have too much of an agriculture-related product range here as a listed offering, but maybe some companies might be affected, particularly companies that need these raw products as their baseline for their produce. We saw some pullbacks in URC recently, and perhaps that could be somehow related, so just be quite watchful. Or some consumer stocks that have some of these things, because it might also get some affected. And of course, these may also affect some food ranges in inflation. Now, in terms of observing much of what we looked at so far, we've noticed that some markets have rallied into the short term, created some overbought conditions, and these overbought conditions need to be tempered. This is why you're seeing some volatility nowadays. The correction that we saw back in April and May, I believe were not enough to be able to handle much of the bigger recoveries that we've seen since 2009. And because of that, this is why it's possible that we could see the fulfillment of an ABC type correction happening to the Dow, maybe even into the Philippines, maybe not too much of a C wave, but at least something that may weigh down to allow prices to be able to move towards better areas of support. Now, these particular B waves that we've been seeing recently, the Philippines have actually gone into a new high. The US did not do that, so it seems like the US is more prone to actually see much more wider pullback. And I would think that the Philippines would probably be a bit more resistant to making such a deep pullback into the short term. Well, that's a bit of good news to us, but it still means that there may still be some issues that might have to be able to withdraw, maybe into the next 1 to 2 months. And if you're asking why, well, I think the headwinds that we're seeing from Europe and China are good reasons why. And so you could see a little bit more of a complementing reason that might surface in the short term to be able to allow prices to pull back and, of course, give you a potential buying condition. Now, like I showed you into the bond market, we have to be able to expect a potential short-term top that might be created, perhaps after maybe a little bit of a worry that might surface over Europe that might send the bond market very, very quickly up, but that might be the end of it and might necessitate a pullback first. So be a little bit more conscious of what may happen there. Euro weakness will continue. I don't think that the trend there is really changing too soon, and so I think the corresponding weakness there would help push the dollar higher or keep it at least lofty, which also may help it try to arrest the appreciation or the fast appreciation into the peso as well. Commodities have split activities in their trends, and we're noticing that the industrial-based commodities are clearly factoring the slowdown into China and to Europe, and that's the reason why you've noticed that the metal markets have been quite depressed. I would expect a little bit more heightening into that decision come the second half of this year. Grains have been showing quite a strong movement. I feel though it's quite a little bit overbought into the short term. There might be some pullbacks, but we feel that the supply pressures is still going to be something that's going to happen into the next 6 months, so we're going to have to build it in. And of course, energy prices will take a very wide range. So if you're looking to be able to trade any companies that are quite sensitive to movements in oil prices, try to do it where oil prices are either coming from the bottom or, of course, are coming from the top and attempting to go in opposite regard. Now let's try to be able to center our view into the Philippine market and see how interesting this can actually be. Now, the Philippine index, as you can see there, I'm showing you from where our last bull market began in 2009. You can clearly see a nice, beautiful uptrend, very much interposed there. There were some points in the middle of that area. We did see some cascading, and that's quite normal. Every time your market is trading into the high end of it, you must attempt to be able to get back, giving new people the capacity to buy at better pricing. That creates a new demand zone and fosters new buying by new sets of people that usually carry the prices much higher. If you look at much of what we've seen and look at where our index is standing right now, you can see we're kind of in the higher end of that range. And with that index being in the higher end of that range, that might have a little bit more difficulty to try to be able to just push up very, very fast in a fast pace. So clearly pullbacks have to be built into that equation as well. And it's quite possible that a retracement of our index between 5,050, maybe a smaller chance towards maybe 4,750, and I will only build that if a problem in Europe will intensify, but I would be quite satisfied in seeing a pullback to about maybe 5,050 or 5,000, maybe even a 4,900 for it to be able to seek some degree of better demand at that area. In the beginning of the year, we've also forecasted, at least on the technical side, that a potential 5,500 mark was aimed at the index. Well, I came 100 points short of that because our index climbed up to 5,400. But keep my fingers crossed that we can still hit that target towards hopefully the year's end after much of these corrections are being factored in. And I'll talk a little bit more about the Philippines so you can see my expectations. Now, let's look at the Elliott wave. I feel that we're still at the verge of wave number 3, and wave number 3 is usually very much the longest wave into the Elliott wave cycle. Usually when markets are climbing into a bull market, they usually have 5 impulse waves moving up. That's at wave 1, 2, 3, 4, 5 going up. And then usually bear markets have 3 phases down, which is what an ABC usually stands for. And like I would agree with what April said earlier, that we're still kind of in the middle to hopefully the little lower half of the growth cycle of the Philippines, and that we'll still have much more to be able to go. Much of the justification of that could also be coming from some historical evidence. I'd like to be able to compare the Philippines now with a index pass that we've seen in the S&P 500, and just to be able to show you how we can plot ourselves somewhere in that mid-range. On top, you have the S&P 500. I'm showing you the index from 2002 to 2006, and how it started its bull market way back there in the bottom, closer to about the beginning of 2003. And if you notice, and quite similar to our index, you could see a very sudden increase for the meantime, as of course the market pulled out of the bear market, shot up, and you will see a consolidation that will appear there. And quite similarly, we also had one not too long ago. And after that consolidation, prices managed to break free and move back into a new high. And I figure that we are somewhere here today. And you can see there's actually quite a very high similarity between what you saw into the S&P 500 then and what you're seeing also right now. And given that particular context, look what happened in the top version. There was a pullback to your 52-week moving average or your one-year moving average. And after it managed to be able to attest to that correction, making valuations attractive once again, it managed to be able to pull that index up, make new highs several times in a quite lengthy period of time moving forward. So we really feel that we're still at this infancy. You can see that the road up, like April said, is not going to be a straight line, but it'll be quite choppy because there are a lot of countries out there that are not as bullish as we are, and these headwinds will clearly reverberate into our market, and you will see that this way. So please don't really get too scared into a correction, even though we try to forecast one. Technicals will try to give you a short-term view of how to expect prices, so you are prepared to be able to take advantage of those opportunities as they come along. Because so many times, if some of you guys have attended my seminars before, one of my favorite sayings that I used to tell you guys is that scared money does not make money. And understanding that particular concept is, if our mind is mentally prepared to take an opportunity as it surfaces rather than being too frightened to move, then you will have much more capacity to take advantage of those opportunities by investing at the proper time without being too fearful. So let's try to be able to understand what mindset is necessary to be able to take up this challenge that we might see some volatility in the short term. Try to be able to make sure your mind is pegged properly. Our market still has a long way to go. And in our ability to be able to finish that entire cycle, as scary as some other places in the world have been, this is our time. And in our ability to scope that particular prospect, you have to be prepared to be able to understand that this bullish sense should be an opportunity waiting to happen as prices make that correction. In the short term, we have to be very conscious of overbought conditions, because getting overbought capacities will allow people to do profit taking first, especially if there are some short-term difficulties. So try to be able to understand that we are coming from a higher range of expectation, and we need that to mellow down a little bit to make things much more attractive. So try to be able to factor that in. In terms of reactions, I would expect that reactions try to be able to move closer to the 130-day moving average, perhaps even the 260-day or one-year moving averages for issues that are not too strong. And I will feel there will be a major bounce that will also come between the corrective process, so that might have some trading capacity for you. So keep that very much in mind, because these will be our new buy windows. Moreover, I think that the Philippine strength into our mid to long term will work into our favor, because our markets will bounce first. You'll probably see a smaller amount of stronger moving stocks that will generate bigger advances. So try to be able to make sure that you're focused on which ones are usually picking up much faster than the rest. Please try to refrain from just buying the stock that falls down the biggest. As much as, of course, valuation is, of course, the preferred investing style, try to understand why it's falling down so fast. So please don't just come around, try to understand it first before taking control of it. Make sure that you spot the capacity for stocks to resist that decline. It's because good participation is coming back inside, and I would rather that you be focused on those rather than issues that are just plummeting. Right? Try to be able to also understand that condition. Now, I want to give you an example of what a strong stock looks like compared to a fairly built issue is, and the weaker stock is, in terms of some of the picks that April showed you earlier on. And I'll just try to be able to narrate here's an example of a strong moving stock. We've seen this METROBANK managed to be able to break into new highs recently. It is currently operating within a nice upward channel. It hasn't broken that major trend line just yet, although a shorter term trend line was broken to announce that profit taking maneuver it's doing. So this is something that I would like to look over. MACD readings and RSI readings also look a little bit high into the short term, but they're quite still positive in their medium to long term view. So this is something that I would be looking to buy into a correction. The lower end of that range preferably would give me an opening window between maybe closer to about 90, maybe even 89 possibly. But these are areas that you probably would want to be able to prepare yourself to be able to involve yourself for an opening on a trading window. A fairly viewed stock should be, a fairly viewed stock would be an issue like Ayala Land. Of course, we've noticed that they came out with some placements, and this contributed to much of the weakness that we've seen inside. But hopefully, you understand what April was telling you, that you're raising that money for a particular end, and so although it might have scared people in the short term, there will be a longer term impact to the money that they raise. And you can see that it's been building a consolidation. So from an upward trend, we're seeing more of a sideways trend right now, and prices are still bouncing within the range of that. I would be looking to buy that closer to the lower end of that price of that rectangular formation, and hopefully trying to see if I can maybe sell that closer to the upper end of that range. That's about between about 19 and maybe a high of almost 23. That's not so bad in terms of a short-term trading range, but let's just make sure that we understand that that 19 area is a very crucial area, and that support over there should try to hold. Now, one of the weaker stocks in the lineup of issue that she showed you earlier on was this one, Alliance Global. Well, if you notice in the upper, if you notice the upper part, it looks a little bit more like what happened to METROBANK. We did have a higher high, but certain conditions started to be able to weaken off, and that the consolidation is generating right now. It's trading at the lower end of the range. Now, although it hasn't broken through an important threshold yet because it's standing above its one-year moving average, it is kind of getting depressed in that lower end, and that makes things a little bit more touchy. So I will just raise my guard that in case that breaks through that one-year moving average, that there could be some more adjustments into the downside, and we'll have to be able to prepare for a potential pullback to those previous lows that we saw sometime in the beginning of 2012. But hopefully that support does not break. The mere fact it's consolidating there and winding means some buying is moving back inside. Let's hope that it can try to arrest much of the selling pressure and try to be able to break out of that top of range. So it's still very much in our watch list, but we just have to be a bit more sensitive to the proximity to that major support level in case we need to be able to activate some of our protective stops. Now, with some of the issues that April talked about, I just wanted to be able to line up. She did just release adding 2 issues into that model portfolio, so I just heard about it for the first time tonight, just like you. So at least you can see that much of our disclosures here, we all hear things at the same time. And in our ability to generate that, I'll try to be able to send you an updated list and factor in SM Prime and BDO into my analysis. But what I've done is I've managed to be able to draw for you some of the short-term trends for each one of those stocks so that you can see how they're being well placed into their trend factor. Right now, you can see of the list that she presented, the ones that have some upward swings as of yet would be METROBANK, EEI, Robinson's Land, and Manila Water. And it is in my tactic always to be able to stay with a stronger issue, and so in preference I would try to align myself with where demand is the greatest so that we can get the most potential for our money into the short term. And so I would suggest just keeping an eye on some of these things. I've also indicated the presence of their short-term moving averages within the 16 and 32 day. If you're wondering why some of them are red, it's because the prices have fallen below it. And as prices stand below those moving averages are now acting as resistance. So until they break above that, short-term trends are likely to stay in that direction for the meantime. Excuse me. Now, outside of her list, I've also taken the liberty to be able to drop what are the stocks that are currently into uptrend so far based on the technical guide that we show you every day. And again, this is, I think, one useful tool that many of you guys, maybe if you haven't yet, I think you should get into the habit of taking a look at every once in a while so you know which are the issues that are quite strong, and that if you're looking for short-term conditions to take advantage of, please have a look at this list so you can see where some short-term momentum claims can actually surface. Much of those strength is shown in METROBANK, RCBC, Aboitiz Power, Meralco, Manila Water, EDC, EEI, First Gen, CISA, First Philippine Holdings, SM, San Miguel Beer, RFM, Pepsi, SM Prime, Vista Land, Empire East, Philinvest Land, Robinsons, PLDT, and Globe Telecom. I think you can see an empty column there. Well, it's empty because I don't see any uptrends into the mining sector. And why is that? Well, I told you, I showed you commodity prices and why it's been quite very much a heavy laggard into our market. And we did see not too long ago, maybe in the span of less than a month ago, we did see some of those mining companies not only maintain consolidations, but even break some integral levels of support. And so until I see some degree of firming up into the level of support, I clearly will not be looking into it, and I hope that, of course, more implementations into the government side might prove to be a bit more positive for them, but into the short term, right now, I don't see the potential for them. Maybe they could have some technical bounce, but maybe for the meantime, that might be it. All right, so in summary, let's just try to understand that our markets moving forward are going to be quite choppy. There's lopsidedness taking place around the world right now, and it's much more difficult to be able to keep our sights zoned on one market and just hopefully that forecast for everybody else. So what we want to do is we want to make sure that we concentrate in our zone, see what keeps us very much strong, factor in potential price shocks because of these parts of the world that might be encountering some weakness. Hopefully that will provide the initiative for prices to make some of those adjustments that you would see out of overbought conditions, and we should use that to be able to capitalize on our ability to take some medium-term positions, hopefully some long-term positions, and try to cast that with the potential up moves that will be coming right after that. I think we are in the right country to be. And very much in our history, I don't think we've ever patted ourselves in the back until, of course, recent times. The Philippines has never been a darling country, at least as far back as I can remember. And now that it's our time, our place, a lot more people around the world are looking at us. And so please try to believe that our uptrend is secure. We're not seeing our market top out, although there might be some short-term adjustment that may be necessary, and to be able to prepare for the potential opportunities that your market will continue to still give you into the medium and long term. Look for outperformers. You want to be able to make sure that underlying strength in your issue is the standout. Demand has to be present. You can't come inside a stock that's not very much deliverable in its ability to generate demand. And much of the uptrends you will see into hopefully the medium and long term should be the ones that you guys should be trying to build in. I would prefer that the stocks you buy are trading above their 130-day moving average, and even better if they're standing above their 65-day moving average or their quarterly moving average. That should be able to give you a good deal of an impression that the underlying demand shift is still very strong, that your stock is being aptly accumulated, and that the potential for your issues is to continue appreciating should be very much just around the corner. All right, so like I said, I hope that much of what you're going to be seeing into the news into the short term might not be too much of a negative factor. To some of you, welcome the opportunity that some of those prices will be a little bit more cheap, because 2 months ago, when I was talking to a lot of people around me, they were quite hesitant to come in the Philippines because they were all talking about overvaluation. But please, now that, of course, you didn't want to enter because you think prices were a little bit overvalued, now that the correction is about to come and give you that opportunity, now you become scared and now you don't want to buy. See, so clearly the mindset has to be prepared before you engage. You can't allow the sentiment of the time to be able to influence your emotion and prevent you from taking much of that opportunity. So again, we came out to be able to present the potential for Philippines, and we agree with our tourism department that clearly that there is much more fun trading in the Philippines. So ladies and gentlemen, have a good evening. Thank you.